Good morning, everyone. Okay. Good morning. So, first and foremost, one thing I do want to say is thank you very much once again for giving me this opportunity to come and share with you, speak with you, and bless you. One thing that I want to start with, I always find that when things are given freely, we don't usually value them. Now, what does that mean? One of the things that I'm so grateful for is the big service. And I don't know who I was sharing it with. I was sharing it with someone. I was sharing with someone that I know. I can't remember who it was. And it was just a conversation that we were having. And I was talking to the person about what our church is doing in terms of supporting the community build wealth, develop themselves, keep wealth, allow people from different industries to come and speak to us about wealth. And this person was so amazed and said, it's so amazing that your church is actually doing this. I have been blessed for all the moments that I've attended and listened to everyone who stood on this platform. I've been blessed. Now, I requested to do this session. The reason I requested to do this session is because I feel that over the years, I have learned through reading, relationships with other people, I've learned about wealth, growth, and finances. I've taught myself. Most of it has been self-taught. But why has it been self-taught? Because at the time, I couldn't afford to get someone to show me or do these things for me. I couldn't afford a financial investor. So I had to self-teach myself. There was a point where I could actually afford a financial investor, but I didn't know where to go. And that's why I self-taught myself. So let's go back. Let's start. Okay. So my session today is going to be based on intelligent investing, right? So we'll start with, let's go to the next slide, Marvin. Okay, disclaimer. So this is a disclaimer. I am not a financial advisor. I am not a qualified stockbroker. I just have a passion for finance and investment. I'm self-taught. I've been trading since 2010. We'll move on to the second disclaimer. I do not do short-term investments or short selling. I don't speculate as well. I don't do Forex. Now with Forex, the thing about Forex, it's not that it doesn't work. It does, but I don't have the knowledge around it. So, yeah. There will always be risk involved, and I don't do Bitcoin. Okay? But that does not mean that those things don't work. I think the question marks, I'm going to put a question mark on Bitcoin and Forex. It depends, yeah? And you'll see why towards the end as I go through my session, okay? So let's go to the next slide. Okay. So if some of you remember, actually the heading at the top is wrong because it actually should say passive income. Most of you remember that when Jonathan started this year, was it this year or last year, when he was talking about the different ways of making money? Warren Buffett, and I don't think I put that clip on. Marvin, is it there? Is Warren Buffett's quote on any of those slides? So Warren Buffett had a quote that he used, and he said, if you do not find a way of making money work for you in your sleep, you will die working. How many of you know who Warren Buffett is? I'm happy for yeah? Does someone want to share who he is? Do you have a microphone that you could share with someone? Let's take the microphone over, okay? I should have actually asked one of my kids to come and help me with this session. They should be doing the running around. I wonder, I think they actually decided not to come because they think I'm going to use them as an example in my session, so they've decided to hide in there. Yes, so if anyone can tell me who Warren Buffett is. So Warren Buffett said, if you do not find a way of making money work for you in your sleep, you will die working. And the truth of the matter is, guys, it's actually a fact, yeah? So if we move on to our next, so who's Warren Buffett? Who can share? Who's Warren Buffett? And what does he do? Did you put your hand up? Miriam? I think Miriam wanted to share who are in buffets. It's fine. You can share what you know.
All I know is he is an, I think, an American investor.
Correct, yeah. And he's built his wealth on
giving it. I think
stocks. He's a philanthropist as well. Yeah, he's one of the biggest. Actually, isn't he one of the biggest? I don't want to quote, but he is one of the biggest philanthropists.
Yeah.
He was one of those that actually led by saying that by the time he dies, he wants to have given away almost all his wealth. He owns a company called Berkshire Hathaway, and Berkshire Hathaway invests in buying companies and also buying stocks and shares in companies that they believe are going to make money. So what's our next? So if we can go back, if we can go back to the third slide. So what I want to talk about today is passive income, making money in your sleep, all right? And some of the things that I'll be talking about over my next 2 sessions are stocks and shares, premium bonds. Have any of you heard of premium bonds? Have any of you invested in premium bonds? No? Wow. It's amazing. What we don't know is scary, isn't it? Okay. And then national savings and investments. Has any of you invested in that? Okay. And then mutual funds. Okay. Let's move on to the next slide. Okay. I don't know is this video going to play? Okay. Let's play this video. So just for reference purposes, and also because I don't want to get done, this is a Barclays ad. Some of you may have seen it. It's a Barclays ad of 7-year-olds going about their day-to-day lives the way we go about our day-to-day lives. Let's see. Is it going to play?
Dog needs walking.
Come on, lads. I have a life too, Bill.
That's for crumpets, sweetheart.
Who got the calamari?
It was for the table.
I didn't eat any calamari, so I'm not paying for any calamari.
What are you, 7?
You think after 30 years I'd be prepared for this? But I'm not. I really should have saved more. Or anything, really. Anyway, happy retirement, me.
Studies show our relationship with money is formed from the age of 7. To start a new one, whatever your age, talk to us today. Barclays. Make money work for you.
Funny ad, isn't it? I'm not advertising Barclays. So the reason as to why I played that ad is because every time that ad plays, there's one thing that always it does one thing to me, and that one thing is it says money habits are formed at 7 years old. And when I think back to my life, the relationship that I've always had with money has always been that of lack. Even though for a proportion of my life, there was a time when there was abundance, as I've shared before, but for the majority of my life that I've always been very conscious of, it has always been that of lack. And some of you may relate, which is why I made some of the decisions that I made then, and what I learned from those decisions and what's changed now. So let's go back and share my story of how I actually started investing. So I've shared this with you before. Years ago, around 2010, but it was actually prior to that. But the reason as to why 2012, 2010 really sticks to my mind was because I got appointed as an HR business partner for a big company. And I used to work at 4 stores. One of them was South Harrow, one of them was North Finchley, Barnet, and Alperton. Now, these stores were challenging stores, and our salary structure meant that if the store performed, you got a bonus. So in 2012, on top of my salary, without even expecting it, I think it was just because the kind of industry that I had worked in, I had never seen that kind of thing. So as I shared with you when I shared my last session, I got a bonus of £6,000. And it was my first time to actually see this amount of money on top of my salary. Now remember what I said when I said money habits are formed at the age of 7. The only thing I knew was to spend. So here we are, packed the whole family into the car. I only had one son then. We drove to Bicester Village. Our bank account was full. Let's not talk about the tax because I hadn't yet calculated that. I think I even spent the money before it actually came into my account because I used to save a bit. So we went to Bicester Village. We bought Ralph Lauren shirts. I bought my husband a Hugo Boss suit that cost about £1,000. He's outgrown it, but he still has it. You know, we sat down for lunch. We had a great time, you know, because we had got all this money. I can't even remember, no, we didn't even own our house. I don't think we owned our house then, but we spent almost half of this money was gone in one day. All gone. That was my story, okay? I bought myself a brand new iPhone then, cash down, you know, and that was my story. So if we go to the next slide, why? I had no financial education. My mom was for those of you that have grown into this country, my mom was a P7, not P7 would be, is it year 6 or year 7 school dropout? But she was very business-minded. That's one thing I liked about her. So I had no financial education. My relationship with money was spending it, and money is king. Save a bit. I used to save, you know. And also, it did matter the people around me. And it's not, you know, I'm not going to criticize the people around me because they didn't know any different than myself. The person who I would have relied on for business or financial advice wasn't there, and that was my dad. And my mentality was spending. However, the people I was surrounded by were different. So I used to work as an HR business partner, but then I had other partners. So remember the word says HR business partner. I had store managers who were my partners. But these store managers had a different relationship with money. And that's where we'll go to the next slide, and I'll talk about their relationship with money. So for the people that were around me at work, one of them, when I came back the next day and I was telling them, we were celebrating the fact that we had got our bonuses. One of them had booked an appointment to see a stockbroker. The other one had a personal advisor. One of the other ones increased his pension for that month in order to reduce his tax liability. So in other words, he called up the guys from pension, HR, and said, can you increase my pension to the highest threshold that it could be so that he could reduce his tax liabilities, but also his pension could be bigger. The other person took some money out of the house that he had at the time, added the bonus that he had got, and they purchased another property. What would you have done with £6,000 then? Now, bear in mind, I actually worked for Sainsbury's for 16 years. But for 10 years of those 16 years, I was paid a bonus. Can you imagine what would have happened if I had started using my money wisely then? But I had no financial education. So what changed? Let's look at what changed. So on reflection, and what changed was I started planning for my next bonus after talking to these store managers and them sharing what they had done with their money compared to what I had done with my money. I increased my pension because we always got our bonuses in May. So around March, April, I'd get in touch with HR and let them know when my pension would increase. And then I also looked at the investment options that were available for me. One of the things that I did then, because the company used to have what you called a share save scheme, I made sure that I invested the highest amount that they would allow us to invest, and they would obviously match that up. I didn't think, and I couldn't really at the time afford a financial advisor. So I remember going into the supermarket and looking at books. I went into Waterstones to try and find books on investment. I tried to talk to people, but some people didn't have the knowledge because they paid others to do it for them. So I went and bought a book, and I've written the name of the gentleman there. He's called Robbie Barnes. He's actually got a good book. However, the cover of the book is not church appropriate, but the content is right. The content's actually right. I couldn't bring the book because the cover's just not, but the book, the content, because it's actually what I would call a dummy's guide to investment. It's a very good book, and that's the book that actually taught me a lot more about stocks, trades, shares, the ticker symbol. It taught me what to do because I actually read it, and I read it twice. So I'd recommend it, definitely recommend the content. You might want to rip the cover off, but I'd definitely recommend the content. Okay? So we then move on. So some of us might say, because if I could just ask, just with a show of hands, how many of you actually invest in stocks or shares or any other form? How many? Yeah? Okay. Are you happy to share what you actually invest in? Just quickly. Stock? What do you? Currency. So you do Forex. Very good. And commodities. How much time do you actually spend on that? Because that you always have to watch. Ah, very good. Okay. What do you invest in, David? ISAs. So you have an ISA. Do you manage that yourself or someone does it for you? You manage it yourself. Very good. Very good. Who else invests in stocks and shares? Very good. Oh, yeah. So some of you might say, but you're gambling. How many actually think that it's gambling? How many actually think that stocks and shares or investments is gambling? Some people do think that, and that's why I put that up. Yeah? These are businesses. What this means is I am taking my money and I'm obtaining capital from investors or venture capitalists to allow them to trade, grow, or expand that money for a propulsion of that company. I do my research. By default, I love reading. For anyone that actually loves reading and understands business, and it's not, it's actually not complicated, truthfully speaking. It isn't complicated. So I do my research. I am not an emotional investor. If you're an emotional investor, I would just say, just stay away. If you're someone that listens to what everyone else is saying, because one of the things, today before I attended, I asked myself, I said, should I really be talking about stocks and shares? Who knows why I asked myself that question? David? Anyone? Have you not been following the way the markets are performing so erratically up and down? But you know what? For those of you that are interested in this is the best time to buy. If you have money sitting around, this is the best time to buy. Highly recommend it. All right? So I do my research. I'm not an emotional investor. I use my head. Research the guys at the top and their experience. That's the company and board directors. I read the reports. Those are readily available online, the business plans, forecasts for the future. I look at their performance, although it must be said, this cannot be used to guarantee what happens in the future. All right? So today what we're going to do, I'm setting the scene, and then hopefully next week I'll actually show you how to do it. I'll show you some of my investments as well, how they're doing. We'll share that, and then we'll get the opportunity to ask questions, okay? Next slide, please. So what are we going to be covering? We'll be covering passive income, what is stock trading, what are mutual funds, the mediums or the platforms, how do I choose my investments? How often do I invest? And why stocks? Okay? So let's look at the next one. So what is passive income? We've kind of looked at that, and I used Warren Buffett's quote, so we're not going to go through that again. What kind of investments would I recommend that you actually look at medium to long term? Medium to long term, for me, that's about 3 years to 10 or 25 years. Now, I believe that this session is actually more tailored, not bad for us, the older ones, but it's more tailored to the younger people. Because it said, and I don't remember the name of the gentleman, but he said then, if you invested 18 pounds a month, in 20 years, you could potentially become a millionaire. But that's 18 pounds. That was then, $18 then. You know, why? Because what it does, and you see the thing is you also need to make sure that you invest in a company that actually pays dividends, because it's those dividends that actually multiply themselves. And the reason as to why it's 18 pounds a month, or let's say as a nominal amount monthly, is because sometimes you buy low, sometimes you buy high. So that kind of adds value and also makes you have more shares in that particular industry. Okay? So what is stock trading? Stock trading broadly refers to any buying and selling of stock, but is colloquial, used to refer to more shorter term investments made by very active investors. Now, active is a term that could be, what's the word? From a legal perspective, you would say it's a moot question. Some people do it daily. I don't invest daily. I don't look at my stocks daily. To be honest, maybe once a month or twice a month. But we'll look at what stocks or funds I actually have. When you hold an interest or proportion of or in an organization, those are shares. And then mutual funds will look at things like Scottish Mortgage, whereby an organization decides to form its a company, and then they will buy funds in different companies that, let's say, for example, okay, I'll give you an example. There was a time when I wanted to buy stock in, what's the name of the TikTok, but I couldn't afford it. But I was determined that I was going to get stocks in TikTok. So what did I do? I looked for a mutual fund that actually has stocks or shares in TikTok, and I invested in that fund. All right? So if there are big companies that you really think are going to do well, or you think have got something or big return on investment in the future, rather than wasting, let's say, $3,000 trying to buy, which one was it? Was it Tesla? No, I don't think it was Tesla. Unilever goes for about 300 the last time I looked at it. Rather than investing that amount, you can actually just get a proportion of it by investing in a mutual fund, okay? So what's the next one? So what are the mediums and platforms that you could use to buy your investments? So I have an account with Barclays, investment banking. I've had that one for a long time. With that one, what you do is you open up a Barclays investment account. You can trade by yourself, so you can actually go in there and choose what stocks you want, or you can ask them to choose for you as well. But I have my reasons as to why I do it myself. The other one that I also have an account with that I use more regularly is Hargreaves Lansdowne. I use that because the reason as to why I choose Hargreaves is because I feel they have a better portfolio than Barclays. And then I have a group of women that we've been investing. We started in 2021. We did it for only 2 years because at some point everyone kind of had their own personal issues, and then we stopped investing, but our money is still there. And the plan was we were going to invest for 5 years. Our term expires next year, and we use Fidelity Mutual. The reason as to why I recommended that they use Fidelity Mutual is because Fidelity Mutual has a better offer when it comes to offering funds in emerging markets and Asia. Whereas most of you know that from a finance perspective, some finances, because, okay, let me reverse a little bit. Most of you will know that if you have a diverse team when it comes to finance and marketing, then you're able to understand certain countries or continents like Asia better than some of the investment managers here who only believe that the bigger returns can only be done within Europe and America. But if you have a diverse team like teams from Asia, I know there are quite a number of asset managers at the moment from Nigeria that offer a bigger and global market spreader portfolio, which allows them to offer a better portfolio. And we'll look at that when we look at my portfolio. When we look at that, you see why I have at least 3 platforms that I use. So Barclays more tailored towards Europe, America, and some emerging markets. Hargreaves, yes, they're okay, but I prefer Fidelity. That's the one that I prefer because I think they offer a more global fund and spread. Okay? And then you have others like Vanguard and then Scottish Mutual. The reason as to why I have Scottish Mutual is because their investment terms or what they require from you is very little. With Scottish Mutual, you can start investing at least £5, whereas with the others, you need at least £25. So with £5, I do something for the kids each and every month. £5, £15, £25 for the children. So we'll move on to the next one. So, how do you invest? So, invest in what you know. Invest in what you understand, the products you use. So, if I was to, let's say, okay, let's see. Catherine, what phone are you carrying? An iPhone. Do you have shares in iPhone? Would you like to invest in iPhone? You don't know, okay? So those are the things, when you're looking at what you're investing in, look at the things that you have around you. So let me turn to somebody else. Let's see. Okay, Auntie Harriet, what bag are you carrying? Say good. Do you have shares in that company? Does it trade on the stock market? Okay. Auntie Margaret, what's the brand of the TV that you have in your house? Samsung. That's a massive company. Does it trade on the stock exchange? Yeah. Do you know what the market share is, or do you know what the share price for Samsung is? No? Okay. So when you're looking at what to buy, always look at things you know. Ideally. Don't go for things that you don't know, you know? Okay. So what games do your children play? That's another one. For me, every time my children come and say, Mommy, this, the next thing I'm doing is what's the share price of that product? That's what I look at, okay? Start by looking around your house. What products do you have? Take an interest and learn how to read financial statements, also called trading statements or company websites, all right? And the next one? So how often? I invest monthly. At the moment, I invest monthly. And what I've done for you is shown you just some of my recent investments. So as you can see, recently I bought stocks in shares. I mean shares in Tesco. And as you can see, they say, you know, the email has the heading at the top. Then it says, Dear Mrs. my name, in accordance with your regular savings instruction, I'm pleased to confirm we have today invested in Tesco PLC ordinary shares. And that's the contract note, just goes to your email. Then on here you can see I also have shares in Airtel Africa, and we'll talk about that. And then the next one, I don't know if I took the third one because I think I had Standard Chartered, but let's see. So how much? From as little as £25. Actually, with Scottish Mutual, I invest £15 a month. All right? Oh, God, no one told me. Okay. Okay, 10:36. Okay, let's see. Okay. And then my thoughts and recommendations. When you're building your portfolio, think long term a minimum of 5 years. Look at mutual funds. I'm happy to share what I invest in. I'm not recommending what I invest in. UK investments versus emerging markets. I am more emerging markets, so it's about how you spread your portfolio. But I prefer investing in emerging markets than the UK funds. And then monthly versus a big lump sum. Because with monthly, what you find is that during certain months, you buy your shares at a higher price. During certain months, you buy your shares at a lower price. All right? The next question I was going to ask was, what kind of funds do you think I have? And then I share that with you, but I understand we've kind of...
Yeah, perhaps you can
time.
ask that in question.
Okay.
Thank you so much. Thank you. A round of applause to our very own Violet. Thank you. Please stay with us. Wasn't that amazing? She never ceases to discombobulate our brains. Yeah? Honestly, well done, Violet.
Thank you. Thanks.
My quick question was, listening to you, you're a mother, an employer. Wow, you do all things. How do you manage to fit this all in what you do?
Okay. So some of this I learned when I didn't have the kids. So I'll be grateful for that. But then with the others, the Bible actually says a good man leaves his wealth for his children and his children's children. Right?
Said, yeah.
Yes. My parents didn't leave me much, and that's another story for another day. But I want to leave my kids something. And, you know, because some of you might look at me and say, God, she talks about all these things, but where is the money? We don't see the money. At the moment, my car's even broken down, you know, but hey ho, that's another story for another day. But being able to invest has allowed me to do a lot of things. And by the way, this is not to say that it doesn't happen. I think I've lost money once. And the only reason I've lost money once was because I took my money out early. But being able to invest has allowed me, so during the time I shared with you when I took time out of the business to go time out of work, or I was asked to leave, or I left in order to start the business, it was the money from selling my investments that allowed me to leave until I ran out of money.
Wow.
Right? Yeah.
That puts context to investing. Guys, if we are late, we are not late. It's now. Right. Are you ready for questions from the audience?
Yes, definitely, yes.
I'll run around with the mic. Or are you helping me, Michael?
Actually, my son's out there.
Thank you, Violet.
Thank you,
You're
Pastor.
super amazing. So my first question is for a rookie investor. Why investments over savings?
Okay. The reason as to why I would recommend investments over savings in 2020, was that when COVID happened, 2020, right? So in 2020, I was getting a group of my friends to invest in, we wanted to open up a mutual fund and then start investing, which we have, and I'll share that with you next week. At the time, there was no bank account, and I believe there still isn't, that would deliver the same investments for a 5-year period as the FTSE 100 at the time. There's no bank account. And the thing about it is when you keep your money in a bank account, all it does is actually lose value, Pastor. It loses value. Any financial investor will say that to you. Any business person or any financial investor will say that when you keep money in a bank account, it loses money. Why? Due to inflation. It just does. You rather put it in a house, real estate, gold. Yes, we do need to have a proportion of money in savings. You have to. But you also have to keep money as an investment or a stock or a share. It's about how you spread your investments. I think that's what it comes down to. How do you spread your investments? And I don't know, someone must have shared the slide of how the Jews save or the Jews manage their money. I can't remember on top of my head, and I don't want to be wrong because obviously this will be broadcast, but I think it's 25 or 20% for investments, shares, and then 20% for savings, and then 10% to charity or 15%, Does anyone remember the circle that the Jews used to teach their children how to multiply generational wealth? So yeah, so that's what I would say. It's about, I wouldn't recommend, let's say for example, if you had £6,000, and let me share something. This is something really personal. So one of my sisters has a lot of money, and she just doesn't spend. She has a lot of money because she just does not spend. This girl will save, she will save, Obviously she's a stay-at-home mom, so that's different. She's a stay-at-home mom, but her husband pays her to look after her children, So because it pays her quite a lot of money, until the children are 18. But what she does is she puts this money in the bank account. And one day she went to the bank, and the banker said to her, "Why do you have this money seated here?" And the banker said to her, "Do you know what? How about if we invest it in this?" Obviously, the person recommended a lower risk product. And my sister decided to invest that money, and she forgot about it. 2 years later, she had amounted the same amount of money, and they invested it again. Because any banker will tell you it's not recommended to keep money as cash. It really isn't. But you have to have that for security, emergency, and all of that. Yeah.
While people are thinking, I'll ask
That's
another
okay.
question.
That's okay.
So, COVID was a strange time.
Yes.
And so when we're talking about investments, are we also talking about like things that give you fixed interest? So where you had NS&I
Yes.
as one of your ones,
Yeah.
and it gives a return, I think at the moment of maybe 4.5, they've dropped a little bit.
Yeah.
So would you count that as just keeping in cash? Or are you talking about the banks which give you 0.4?
Obviously, there are certain, I think for me, when I look at bank accounts, I think it depends on how much the person has. I don't have a lot of money in bank accounts. I'm not going to lie about that, because just trying to figure out 3%, I'm thinking to myself, I don't want my money sitting in here, but I keep it for emergencies. So national savings and investment, the reason I chose to save with them, Pastor, is because at the time, trying to get money out of that account takes at least 30 days. So by the time you want to take that money out of that account, you've solved whatever problem you wanted to solve.
That's a fixed term.
It's a fixed term.
Yeah.
That's correct, yes. And then the other thing that we haven't talked about is government bonds as well. That's a good one. Treasury bills as well. In Uganda, unity trusts. Those are also other things that you could think about.
Yeah, there's been a lot of talk about African opportunities and how much more they are paying.
Yeah.
How secure is investment in those kind of countries where elections can go wild and stuff can go wrong?
Very, very good question, Pastor, and I was hoping someone is actually going to ask, which actually brings me to this question at the back. Can we just have a guess of where my portfolio is spread? Just a guess. Anyone? China, one, okay. Europe? Uganda? Asia? Everywhere. You guys are cheating. Okay, let's share that screen, Pastor, and hopefully I'll answer your question with that screen. So let's share that screen. So this is my portfolio. So for the younger ones, you can recognize I've got Roadblocks shares, yeah? My kids play a lot of Roadblocks. Why am I going to be putting my money there? And then, Pastor, you can see I have Airtel, and I would recommend Airtel. It's never let me down. I've been investing in Airtel for 6 years now. I'll recommend it, and I'll talk about why. Total, it's not there. It should have been there. So I have shares in Standard Chartered, which is an African bank. I have shares in Airtel. I have shares in Allianz. Allianz, does anyone know what Allianz is? A German insurance. But why do I have a German insurance company? No. Anyone? High interest. So Allianz is actually one of the global insurance companies that's actually now offering insurance products in Africa. Right? Why Africa? The middle class in Africa is growing. Obviously, we do not know what the impact of USAID will be in Africa, but there will be other people that will. But the middle class in in Africa is growing. In most cases, it's actually a little bit better than ours, or they live a better life. Now, in order for global organizations that are actually transferring their wealth or their businesses to Africa, like British Gas is in South Africa, they need to be able to offer insurance products to their people or to the people that they're trying to attract. Most of them go to Allianz. So, Pastor, your question was, what is it like, or what's the security when it comes to the geography and the companies? What I try and do is I try and invest in global organizations that have an interest in Africa. Airtel is actually an Indian business that actually has a big interest in Africa. I invest in Africa because I actually don't think that in the future banks are actually going to be that relevant. In Africa, Uganda, as I know, Kenya, Nigeria, banks are on the phone. Yeah. They are on the phones. Yeah, Airtel is a bank. And when I look at my portfolio, Airtel actually delivers the best return on investments, better than any of those portfolio products that you actually have on there. Yeah, so I still also would recommend that you put a proportion of your money. That's just remember, I'm not a financial investor. I would still recommend looking at things like, at the moment I'm looking at unity trusts in Uganda. And yes, I understand that the political situation is unsteady. But because of the high risk, the returns on investments are higher. However, you need to ensure you only, and I always, even just with all of this, to an extent, invest what you think you can lose and take out as well when you need to take out. But don't use the economies and all of that. We all know the geography of Uganda. How long has Uganda been stable for now anyway? We don't know what the future holds, but well, who knew the USA would be where it is at the moment?
Thank you, Violet. That was brilliant. Thank you very much. Before, I just want to add on to what Pastor Lincoln asked about the various risks within, like Africa. We had a high-powered investor who came to educate us, like you, about investments in Uganda. And actually what everybody was asking is the same question. And what they said, which is actually true, is that these, for example, if you invest in government bonds or unit trusts, it does not matter whether there's a change of government, they cannot be, they are secure. They are, the government or the politics does not affect them. And indeed what you said, unit trust is one of the highest paid, income
return on
returns, yes. So really these, you just have to find out. They actually told us exactly the best ones where to invest, which are not affected by the politics or change of government. But also, what they did say is that all our money sitting in our accounts, they invest it in Africa. And they get a return of about 30%, and then it comes back, and then they give us the 0.something return. So what you say about having money in the savings is a no-no, apart from emergencies. Thank you.
No, thank you. Very good. And just to summarize on that, I think I keep using the word I think, but many of you will know that most of the rich people, not the really wealthy, like the tech guys, but Wall Street, the stock exchange, the bankers deliver a massive, and they get paid a lot of money from using your money. They use your money to go out and invest. So why don't you use it yourself to actually go out and invest? But remember, I know Auntie Harriet said your money is not at risk. There is always risk. There's nothing that's 100% zero risk, okay? Thank you so much for giving me this opportunity to share with you. And hopefully next week, I'll show you how to do it, okay?
Thank you so much, Violet. Are those individual shares or in a mutual fund?
So, very good question. So the 10 cent Roblox is an individual share. 10 cents. So 10 cents I actually have mutual funds with Scottish Mortgage. So Scottish Mortgage invests in 10 cents, which owns ByteDance, which owns TikTok. And then Sainsbury's is an individual share. BP is an individual share. Forget about all that business of electricity and all of that. Yes, cars are going to become electric, but BP is going towards that. And then Allianz, we've talked about that. Just Eat, I sold my shares in that. I actually made a good profit in that. Airtel is an individual share. Tesco is an individual share. Standard Chartered is an individual share. Total, which is fuel, is an individual share.
Wow. Wow. Such a star among us. Thank you so, so much. You heard where she started from. Guys, she needs a bigger round of applause.